Hey y'all, welcome to the Filling Station. So in this video, we are discussing charting tips, ways to help us with our trading journey, right? So let me go ahead and give my disclaimer. I am not a financial advisor. I just enjoy teaching people how to build generational wealth, and yes, the stock market is just one of those avenues. So this video is for educational purposes only. With that being said, let's get started. So we are looking at the VIX, and today the VIX made a high of $65.73, and that's interesting considering we were down here in the $29 range. So something happened to cause us to go from $29 to $65. But my question is, what made it stop in this area, right? So the news came out for whatever reason, what stopped us from going higher? Why didn't it stop in this area, right? So they always say, when in doubt, zoom out. So I'm going to go back to the daily chart only because I want to figure out what stopped us from going higher, right? So normally I use the 3 month 1 day on my chart, but for this example, I went to the 5 year because I want to zoom out further to get a wider scope as to what's really going on or what has happened previously, right, or before. So as of now, I'm going to see if I can find, I made that little green line to see what cost us in that $65 range, and maybe I should have extended the line. So let's go back, and we call this is charting 101, right? So I'm going to go and see if I can extend this line to the left so that I can see where it is on my daily chart. Here we are. So on 8/5 we hit a high of $65.70. So we are in the area back from March of 2020. So we're back in COVID era here, because the green line is the line that we marked for today, and we're not far from March the 30th, 2020, which was here at the 66.44. And if by chance, beyond the 66.44 area, the 67.83 is another area that we could possibly, have some trouble. And again, these are back in 2020 range, right? So what stopped the VIX at that point was around this 2020 area. This area, let's see, we stopped at 65.70, the 66.44, but the previous day, the body of this candle is right here at the 66.70. So it was from 327.20. So we got rejected today when we made that high of 65.70. It actually came from a March around the 27th area, this candle here that kind of stopped us. This is where we met our trouble place or our resistance area, and that's always interesting to know. So what I did, I was on a 30-minute chart. I went from the 30-minute chart because that's where we're going to have, I saw that we had trouble in this area, and I say that because you want to remember those places, right? You want to remember the places where the stock was stopped or didn't go higher. That was your resistance. It did move higher from this point, because at some point we're going to come back to that area. Don't know when. I always say anything is possible, but nothing is guaranteed. We don't know when, but at some point it's going to come back to that area. So I marked that to let me know that this was from an 8/5. So I put 8/5 high, right? So I know that if we come back up to this area, we could probably have trouble here at the body of this candle, which was around the 66.48 area. If we come back to this area and break through this area, the high of right here, the tip of this candle here was at 67, let's see, 67, 69, 67, 83 area. So I know I can have trouble if it breaks this area at this area. So what I do is normally I look at the body of the candle, and then I look at the wick of the candle, because normally that's where price is. That's what I call my gathering spot, right? So I'm going to use the SPY really quick to make an example here. So the SPY for a gathering spot, the SPY back in, let's see, March the 7th, 2024, we created a gathering spot here. March the 7th, 2024 is when we started. Well, it came here. So March the 1st, March the 2nd, March the 4th, March the 1st, March the 4th, and then we came down only to come back up. So we'll say around March the 7th area, we created a gathering spot. And when I said gathering spot, as you can see, price just stayed in this area. Yes, we went up, but we came back down to the gathering spot, right? So if we go back out to where we are today, on today's candle, today 8/5/24, SPY has come back to the gathering spot, which wasn't surprising at all. I mean, the decline that we made, but for us to be in this area, we knew that it could come back to. Why? Because this is the price where buyers and sellers were, we were coming back to this area. And today, our candle closed at 517.38, and look where it's right there at the top of where our gathering spot is. So it's always important to know where you're going to have trouble, identify those places, and mark those levels. And I know sometimes when I look at my SPY chart, it seems overwhelming because I chart the SPY and trade the SPY a lot. So I need to know where my trouble places are. So whatever is easier for you to come up with, I make it a lighter color so it's not really blunt, aggravating the eye or sensitive to the eye when I look at it. But charting is just figuring out where you're going to have trouble and being able to identify those areas before you actually get in the trade. Now, is it going to be the exact place all the time? Maybe not, because keep in mind, we're all looking at the same chart, right? So when I look at the VIX here, the other people on the opposite end of your trade, they are looking at the exact same charts that you're looking at. So they know that you're going to have resistance here around this area of 66.44. So they could very well make it stop a little bit before that or a little bit after that just to throw you off. But you know what? The example that I have for trading, it's like playing football or any other sport, right? You have two teams that know the sport, they know the game, they know this. So what you're trying to do is outsmart the other person so that you can win. And that's exactly what trading is. You have buyers and you have sellers, and both people, you're learning the game, the game, and you want to try to, figure out ways that's going to help you outsmart the next person. So, and I hope I explained that right, but that's how I see trading as, it's just like any other sport. And sometimes, like today was one of those days that maybe we could have just sat on the sidelines, right? Just sat on the sidelines, because after seeing how the SPY moved, maybe that was a place for us to just step back and say, okay, you know what, maybe I don't need to trade today, and maybe I need to just look at it from a different viewpoint and learn from it and see what I can gather, and then go into the market. So every day may not be a trading day for you, but learning how to chart and knowing where you're going to have trouble is really, really important to trading, and not totally depending on someone else to do that for you. I said earlier, that we have a gathering spot here, but SPY also has gaps to the downside, right? So at 508.56, there's a gap. 505.89, there's a gap that needs to be filled to the downside. Now, we did come down to 507.83 only to try to fill that gap, but keep in mind, we have people on the opposite end that wants to make you think that this is exactly what's going to happen. Oh, it's going to come down and fill this gap. Well, they used that. We bounced off that, found support here, bounced off that, and moved back to the upside. Is this gap closed? It is not. So I do believe at some point the SPY is going to come down to this 505 area to fill the gap. And if you look at the daily chart, that is right at the 200 EMA on the daily chart. Let's see. So this is the 200 EMA on the daily chart. If we come back to close that gap area, it's down at the 505.96. Our gap fill is down here. Let's see, at 505.89. So we fill the gap down here at 505.89 down to 505.96. So that's really, really close. So it wouldn't surprise me to see the SPY come down to fill this gap. But again, just keep in mind, there's always somebody on the opposite end of your trade that does not want you to gain, let's see, profit from that. So always be mindful of where you're going to have trouble. And again, we're all looking at the same charts. Again, it came down today, gave us one of the moves like it was going to come and fill this gap, only to find support and bounce back to the upside. So what I wanted to point out with the SPY and charting is how to identify your gaps. So we are looking at the daily chart for the SPY. Again, this is a gathering spot. However, we have a gap that needs to be filled, right? So I'm going to see if I can make this a little bit bigger here. So I hope that's not too okay. So looking at the SPY from this viewpoint on 5/2/24, the high of this candle was 505.89. Okay, well the very next day, which was 5/3, the SPY gapped up. That means it opened higher than this 505.89. So I go to the low of this candle here was at 508.56. So from 508.56 down to 505.89, it created a gap that will need to be filled. Looking at it again, I always go to my daily chart. Looking at it on this daily chart, and I do that often. So looking at it on this daily chart, let's see. And SPY has a few gaps to the downside. Let's say that. So again, looking at it on this daily chart, we see that from this day to this day, there was a gap up. So I'm going to go back to the 30-minute chart because we saw it a little bit here. It's this gray shaded area down here. Price came down, gave that little, found support only to bounce up. So we did not fill that gap down to the 505. So again, so that you can identify your gap fills or gaps, always look at your daily chart and see, if we know that it closed at 517 and tomorrow it opens at 525, then we know that there's going to be a gap to the upside that needs to be filled. So those are places that I will go and mark so that I'll know, because most stocks come back to fill the gaps. Most stocks come back to fill the gaps. Now we're going to go back. I'm going to zoom out with the SPY because there's several gaps to the downside for the SPY that was created here. Let's see, 11/14/23, there's a gap around the 446.09 area, and down here at 430.92, let's see if I can make that a little bit bigger, 446.09, there's a gap from the SPY that was created around 11/13 and 11/14. So there's a gap from here to here. Price closed the high of this candle, the low of this candle created a gap. The next day it gapped up. So there's an area 446 to 441. We have another gap filled down here. Let's see. At the 11/3/23, 430.92 up to 432.90. So there's a small gap from there that needs to be filled on the SPY also. So to be make a new high, the all-time high that we've made thus far around the 552 area, it's not surprising to see us come back and fill some of those gaps to the downside. But again, charting is just finding out where your trouble places are, your support and your resistance, what stopped your stock from moving higher, and labeling those places however you can. And if it's overwhelming, to have a lot of lines on your charts, just do key areas that you may feel that's key areas for you and just use those places. But I have to go because I want to know, possibly where I could have trouble. I mark these lines and I put them there, and sometimes you can zoom in. There's ways to adjust your chart so that it's not too overwhelming for you. You can sometimes move to a higher time frame and get a different view. Again, it's just whatever works best for you. So again, always go and identify where you're going to have trouble. And it's easier for me to go to my daily chart and zoom out, as we have with the SPY here, to identify our gaps that need to be filled, and with the VIX to know that we are back at COVID low or COVID high, let's say that, around this 65-70 area, which was created on today 8/5. So just know that we can come all the way back to 85.47, which was back in March. Let's see, March, I believe, March the 6th, 2020, we reached 85.47. So that's interesting to know, because we could very well come back to the $66 or $65 range, 65.70, break through that, and break through this 74.24 area, only to try to make its way back up to the 85.47. So charting again is just finding out where you're going to have trouble, and to do that, normally I go to the daily chart and I zoom out to know that, where's the top of this candle, where if it has a wick, I want to get the wick, but where's the body of the candle? The wick is here, but the body is here. So I need to know, definitely watch the 5922 area, right? Because that's where the body of the candle is, and the wick is here, and I do need to know that because we reached that area, something stopped it at that place. But right now, sellers were there to take their price back down, right? Just looking at it from this perspective, again, this is on a 4-hour chart, but identifying where your trouble places are and knowing that I always start with the higher time frame, especially using your daily chart to let you know that and these candles down here at the bottom, they could very well help you with identifying support and resistance, even back to the downside. So if we wanted to know where our trouble places are to the downside, I'm going to go back to the 3-month, which will be kind of hard to see it at, where are our trouble places to the downside. Let's go back to that 5. Yeah. So we were in this area down here, let's say around 23. If we make it back to the 2344 area, which is a long ways down, just know that we're going to have trouble here at the 2951. But there's some other places in between that I have got to go back and chart those places to know where my support will be. Meaning if we come down to this place, then, we could very well bounce back to the upside. Again, with trading, it's trying not to make it complicated. It's really not complicated. It's identifying where your trouble places are and being able to put it in a place to where you can easily see that, right? So looking at the VIX here on this daily chart, if I was to go, to this is the 5-minute chart. Looking at it on the 5-minute chart, I know that this 8.5 high here is still visible on my 5-minute chart, and I know that this 330.20 area here from 2020 is now visible on my current 2024 chart, so that I'll know that if we break past this place, then we have broken through an area from 2020, which is a high that we created back in March of 2020. So that's something to be mindful of, y'all. So I hope these videos are very, very helpful. Just know that, identifying where you're going to have trouble, being able to identify, what stopped that candle from moving, labeling those areas, and making sure you understand that we could very well come back and retest those areas again is very helpful. Remember your resistance and your support. That is exactly what trading is about, identifying your trouble places. So again, y'all, I hope that everyone have a very, very productive day today, and just know that we learn and grow together. If you could, please like, share, comment, and subscribe. All that good stuff. We learn and we grow together. So I always like to leave you with this: be blessed as well as a blessing unto others. Until next time.